I lost over $100,000 in the market since Trump took over as president. Some people are saying that Bitcoin and crypto have been holding up well since Liberation Day. In reality, we've been getting liberated from our... These are the kinds of days where I intentionally try to go touch grass. I made friends with a bird. His name is Jim. He's our freeloading cardinal, and he's really helping me process being down 6 figures so far. The markets can always go lower. Since January 20th, the S&P 500 is down, the Russell 2000 is down, and Bitcoin is also down. Why we're hearing crypto is holding up is because it's true in the short term given all the tariff news, but from January 21st through February 7th, the S&P 500 and the Russell 2000 traded flat while Bitcoin fell, which means that maybe some of the market move might have already been priced in. Now that's speculation, so let's look at some factual data. A quick look at my Robinhood portfolio, and it's pretty clear lots of red on the board. And on the crypto side of things, my largest holding, XRP, was trading at about $3 earlier this year. It's now floating around the low $2 range, which is where most of my losses come from. The thing is, volatility, as scary as it is a feature. The massive upside in assets comes with big swings to the downsides, and I'm sharing with you my losses because I want you to know that you're not alone if you're seeing a lot of red. And I wanted to share with you the fact that my Robinhood portfolio, also known as Earl, my golden piggy bank where I put money in and magically more money gets made, has received 45 individual dividend payments from January to March of 2025. They are worth in total $570.83, and there's more already on the way for April. So my portfolio looks very different than other people's holdings because part of this is designed to protect me from myself. Every time the market gets volatile like it has recently, I smell opportunity. If we're gonna get very honest, I get greedy and I want to trade stocks, options, crypto, anything to make a profit. I'm also not very good at trading. In my case, it's closer to gambling. So I decided to buy ETFs that let other people do it for me and keep myself out of my own way as an insurance policy against me. I have no idea if these positions will work out for me in the long term, and I know most of these do better in a flat and bullish market. So I know there's gonna be some red in here. Let's find out how much. Hi, I'm Raj. On this channel, we talk about money. In this video, my money. Earl, you've been getting busy getting big dividends? Oink! So we already discussed my XRP position being down significantly, but I'm overall up since I was accumulating from 2017, which means despite a 30-ish% drawdown, this was still a 7-year overall holding period and is still a 4x trade from the 50-cent range to the low $2 range for XRP. Moving to my Robinhood account, my largest individual position here is SCHD. It's about 55% of the portfolio, and I really love this ETF. It's a basket of high-paying dividend stocks, and it's generally a tax-friendly option, so it's great for a taxable account like this one. SCHD is the core dividend ETF that I build around in this account. As of now, I'm down 1.45%. My average cost was $25.70 per share, and I'm buying $2 a day of SCHD as a recurring investment. The very interesting thing about this ETF is that it's worth over half of this portfolio, but it only accounts for 16% of the dividends I received this year. That's because the rest of the dividends come from high-yield, income-oriented ETFs. These don't necessarily provide a long-term growing dividend with broad stock exposure. They're more actively managed, have higher expense ratios, have higher risks, and most have higher tax implications. So that's a ton of negative stuff. Why do I own them? Well, there's a chance that I would lose all the money I would trade in the markets with, so I figured it's better to take that money, buy into a fund manager's trading strategy, and see what happens, as opposed to thinking I'm smarter than I actually am and stress myself out trading while I'm working and end up losing 100% of the money anyway. The internet told me I have high cortisol, and apparently that's bad. Fine, I'll make better decisions and let other people trade for me. These funds also increase my dividend yield overall while I hold them, and some of them are high risk but have the potential to pay out my entire investment in just a few years of holding. This is the first major market shakeup since I bought them, and I don't know what's going to happen, but my stress levels are much lower because I know my money is working for me during the volatility, and I'm not tempted to do any trading on my own. So let's see if I'm losing money. So this is JEPY, and it's based on the S&P 500, and JP Morgan uses covered call options to generate a premium. Some of that premium is passed to investors as a payment. According to the Robinhood account, my average cost is $55 per share, and I'm down 4.92%. But because this is a covered call ETF, I've been receiving a dividend, and those aren't necessarily factored into the on-screen math, which means I have to do actual math. You guys remember these? You guys still have have yours? This video was literally brought to you by this. If I didn't have this would have never happened. Total returns are what we really need to look at because at the end of the day, it's an income ETF. It's about dollars in and dollars out. In total, so far, I invested $1,463.98 in the JEPY. The 29.63 shares are worth currently at a price of $52.37, $1,551.72. Because I've been reinvesting the dividends and the price fluctuates, there's a bit of a difference between dollars in and dollars it's worth. The total dividends I've received from the position since I first purchased is $168.29. So $1,463.98 invested, $168.29 paid out. That's a difference of $1,295.69. Because the 29.63 shares are liquid, if I were to sell right now, I would get an additional $1,551.72, which means I'm overall still up $256.03 despite what Robinhood is reporting. Let's get into JEPY. This is another covered call ETF from JP Morgan, but it's based on the NASDAQ 100. I've invested $938.70. I've received $168.10 in dividends, and the total position is currently worth $1,062.91, so I'm up $292.31. Let's move on to SVOL. This particular ETF makes money from the VIX, or how market volatility is measured, more accurately when it's trending lower. Not great during these times, but most of the time it's not as wild as right now, so it has potential long-term. I've invested $1,040.30. I've received $130.03 in dividends, and the total position is currently worth $712.86, which means I'm down $197.41. What about SPYI? This is another S&P 500 based covered call ETF, but it's more tax-friendly compared to JEPY. I've invested $1,000, I've received $177.72 in dividends, and the total position is currently worth $1,064.86, which means I'm up $242.58. FEPI, another covered call ETF, but concentrated on FANG stocks. I've invested $994.59. I've received $343.90 in dividends, and the total position is currently worth $914.35, which means I'm up $263.66. ULTY, this is a fund from YieldMax without a lot of hard trading rules. I see it as I'm buying the ETF, YieldMax fund managers take the money and trade options with it. If they make money, I make money. If the professionals whose job it is to do this lose money, I definitely would have lost money too. I've invested $500, I've received $258.37 in dividends, and the total position is currently worth $203.28, which means I'm down $38.40. NVDY is another YieldMax fund which doesn't hold NVIDIA stock directly, but uses a synthetic covered call strategy to generate a yield from NVIDIA. I've invested $500, I've received $83.07 in dividends, and the total position is currently worth $390.92, which means I'm down $26.01. MSTY, this is a YieldMax fund that works the same way NVDY does, but it uses MicroStrategy instead of NVIDIA. I've invested $500, I've received $64.81 in dividends, and the total position is currently worth $440.48, which means I'm up $5.29. YMAG, this is a fund of funds combining multiple YieldMax ETFs based on the Magnificent 7 stocks. I've invested $500, I've received $33.76 in dividends, and the total position is currently worth $391.59, which means I'm down $74.65. XDTE is a fund with a strategy of using zero data expiry options based on the S&P 500. I've invested $500, I've received $20.43 in dividends, and the total position is currently worth $420.70, which means I'm down $57.87. So interestingly enough, my only covered call positions I'm up on in terms of dollars in, dollars out / how much I could get if I sold right now are JEPY, JEPQ, SPYI, and FEPI, with an honorable mention to MSTY being up about $5. Everything else is down overall. So with this data, it'll be interesting to see how this plays out in the future as the market recovers, and I'm not making any moves right now because I don't necessarily have to sell, and I don't want to sell for lower if the market recovers eventually. So for now, I'm just holding and collecting data. Let me know your thoughts in the comment section, and I'll see you in the next video. Have a good one.